Did you know that the first recorded tax rebellion happened over salt, and it led to the downfall of an entire empire? And today, governments are scrambling to figure out how to tax invisible digital coins that didn't even exist 20 years ago. The story of taxation is actually the hidden story of human civilization itself, and it's way more dramatic than your high school history teacher ever let on. Welcome back to the channel where we dive deep into the stories that shaped our world. I'm your host, and today we're embarking on an epic journey through time to explore how taxation evolved from ancient barter systems all the way to the modern cryptocurrency revolution. Trust me, by the end of this video, you'll never look at paying taxes the same way again. But first, let me ask you something. Have you ever wondered why we even pay taxes in the first place? I mean, who was the first person to say, "Hey, you know what would be great? If everyone gave me part of their stuff just because I said so." Well, buckle up, because that story is wilder than you think. Let's start at the very beginning, back when money didn't even exist. Picture this. You're living in ancient Mesopotamia around 3000 BCE. There's no coins, no paper money, just you, your goats, and your grain. The earliest forms of taxation weren't about money at all. They were about survival and power. Ancient rulers figured out pretty quickly that if they wanted to build temples, maintain armies, and fund their lavish lifestyles, they needed resources from their people. So they developed the first tax system based on what people actually had: their livestock, their crops, their labor. If you were a farmer, you might owe 1/10 of your harvest to the king. If you were a craftsman, you might have to work on royal projects for a certain number of days each year. But here's where it gets interesting. These early tax systems weren't just about collecting stuff. They were about establishing who was in charge. When you handed over part of your harvest to the local ruler, you weren't just paying a fee, you were acknowledging their authority over you. Taxation was, and still is, fundamentally about power. The ancient Egyptians took this concept and ran with it. They created one of the most sophisticated early tax systems in human history. They had tax collectors who would travel from village to village, carefully recording who owed what. They even had different tax rates for different types of land and different crops. Sound familiar? The Egyptians basically invented progressive taxation thousands of years before modern governments got the memo. But the real game changer came with the invention of money. Once civilizations started using standardized coins, taxation became a whole different beast. Suddenly, rulers could collect taxes in a uniform currency, making it easier to fund large-scale projects and maintain standing armies. The Persian Empire was one of the first to really capitalize on this, creating a vast network of provinces, each responsible for paying specific amounts of gold and silver to the central government. Then came the Romans, and oh boy, did they have opinions about taxes. The Roman Empire built one of the most extensive tax systems the world had ever seen. They had property taxes, inheritance taxes, sales taxes, even a tax on unmarried men. Yes, you heard that right. If you were a single guy in ancient Rome, the government literally taxed you for not having a wife. The Romans were also masters of tax innovation. They invented the census, not just to count people, but to assess their wealth for taxation purposes. Every 5 years, Roman citizens had to declare their assets, and tax collectors would use this information to determine how much each person owed. It was like filing a tax return, except if you lied, they might crucify you. But Roman taxation also planted the seeds of the empire's downfall. As the empire expanded, maintaining the massive military and bureaucracy required more and more tax revenue. Tax rates kept climbing, and eventually, many provinces decided they'd rather be conquered by barbarians than continue paying Roman taxes. It turns out, there's a limit to how much people will pay before they start looking for alternatives. Medieval Europe took a completely different approach to taxation. Instead of the centralized systems of Rome, feudalism created a complex web of obligations and payments. Peasants owed labor and crops to their local lords. Lords owed military service and tribute to higher nobles. And everyone owed something to the church. It was like a massive pyramid scheme, except instead of selling essential oils, people were trading military protection and spiritual salvation. The church, by the way, was incredibly creative when it came to taxation. They invented the concept of tithing, where everyone was expected to give 10% of their income to support religious activities. They also sold indulgences, basically payments that would reduce your time in purgatory. Imagine if the IRS could tax your afterlife. That's essentially what the medieval church was doing. But the real revolution in taxation came with the rise of nation-states and international trade. As kingdoms consolidated power and merchants began trading across vast distances, governments needed new ways to generate revenue. Enter customs duties and trade taxes. Governments discovered they could make enormous amounts of money by taxing goods as they moved between regions. This is where things start getting really spicy. Trade taxes led to some of the most dramatic events in human history. The Boston Tea Party wasn't just about tea, it was about taxation without representation. American colonists were furious that the British government was taxing their trade without giving them any say in how those taxes were set. This principle, that people should have a voice in their own taxation, became one of the foundational ideas of modern democracy. The French Revolution was also largely about taxes. The French monarchy had created such an unfair and burdensome tax system that ordinary people were literally starving, while the wealthy paid almost nothing. When people are choosing between paying taxes and feeding their children, revolution becomes inevitable. The Industrial Revolution completely transformed taxation yet again. As factories emerged and people moved to cities, governments could no longer rely on agricultural taxes and feudal obligations. They needed new ways to tax industrial production and urban workers. This period saw the invention of income tax, which initially was supposed to be a temporary measure to fund wars, but somehow became permanent pretty much everywhere. The 20th century brought us to the modern era of taxation, with comprehensive income tax systems, corporate taxes, and Social Security contributions. World War I and World War II dramatically expanded the role of taxation in most countries, as governments needed massive amounts of revenue to fund their war efforts. After the wars ended, many of these expanded tax systems remained in place to fund new social programs. But now we're living through another taxation revolution, and it's happening because of technology. The rise of the internet created new challenges for tax authorities. How do you tax a company that exists entirely online and can technically operate from anywhere in the world? How do you tax digital services that don't have physical locations? And then came cryptocurrency, which threw traditional taxation into complete chaos. Bitcoin and other digital currencies operate on decentralized networks that don't recognize national borders. They can be transferred instantly across the globe without going through traditional banking systems. For tax authorities, this was both a nightmare and a wake-up call. Governments around the world are still figuring out how to handle cryptocurrency taxation. Some countries have banned crypto entirely, others have embraced it, and most are somewhere in between, trying to develop new frameworks for taxing digital assets. The challenge is that cryptocurrency transactions can be anonymous, borderless, and incredibly complex. Consider this. If you buy Bitcoin in one country, trade it for Ethereum in a second country, use that Ethereum to purchase an NFT from someone in a third country, and then sell that NFT for a different cryptocurrency, Which government gets to tax what part of that transaction? It's enough to make tax lawyers weep. But here's the fascinating part about where we are right now. Cryptocurrency represents the same fundamental tension that has existed throughout the entire history of taxation: the balance between individual freedom and collective responsibility. Just like ancient peoples had to decide whether to accept their rulers' tax demands or rebel, modern cryptocurrency users are essentially asking whether traditional government taxation models still make sense in a digital, borderless world. Some cryptocurrency enthusiasts argue that decentralized digital currencies could eventually make traditional taxation obsolete. They envision a future where people can opt out of government tax systems entirely by conducting all their economic activity through untraceable digital transactions. It's like the ultimate tax rebellion, fought with code instead of weapons. But governments aren't giving up without a fight. Tax authorities are developing new technologies to track cryptocurrency transactions, requiring exchanges to report user activity, and creating new legal frameworks specifically designed to capture digital asset income. It's an arms race between tax avoidance technology and tax enforcement technology. Looking back at this entire journey from ancient barter systems to modern cryptocurrency, one thing becomes clear. Taxation has always been about much more than just collecting revenue. It's been about defining the relationship between individuals and their governments, about determining who has power and how that power gets exercised. Every major shift in taxation throughout history has reflected broader changes in technology, social organization, and political philosophy. The move from barter-based taxes to money-based taxes reflected the rise of standardized currency. The development of income taxes reflected the growth of industrial economies. And now, the challenge of cryptocurrency taxation reflects our transition into a digital, globally connected world. So what's next? Nobody knows for sure, but if history is any guide, taxation will continue to evolve alongside technology and society. Maybe we'll see the development of automated tax systems that use artificial intelligence to calculate and collect taxes in real time. Maybe we'll see the rise of new forms of digital governance that make traditional nation-state taxation obsolete. What I do know is that the story of taxation is far from over. As long as humans organize themselves into societies and need to fund collective activities, we'll need some form of resource-sharing system. Whether we call it taxation, tribute, tithing, or something entirely new, the fundamental challenge remains the same. How do we balance individual autonomy with collective needs? The next time someone complains about paying taxes, remind them that they're participating in one of humanity's oldest and most consequential social institutions. From ancient Mesopotamian grain tributes to modern cryptocurrency regulations, taxation has been the invisible force shaping civilizations for over 5,000 years. And who knows, maybe someday, future historians will look back at our current struggles with cryptocurrency taxation the same way we look back at ancient tax rebellions, as just another chapter in humanity's ongoing negotiation between freedom and responsibility. What do you think the future of taxation looks like? Let me know in the comments below, and don't forget to subscribe for more deep dives into the forces that shape our world.